I think that Trump realizes that Bitcoin and the crypto industry in general is incredibly powerful politically and economically. The Genius Act, the launch of of stablecoins, the Bitcoin strategic reserve, all of those things are indicative. The U.S. went from grudging acceptance of Bitcoin, dragging their heels on everything else, and being fairly indifferent to the opportunity as of a year ago, to enthusiastic embrace of Bitcoin, enthusiastic embrace of all the digital assets industry, and they went to leading the industry, and now they're kind of in the driver's seat. They're probably the most progressive, and other countries are going to have to keep up.
Michael Saylor has long been one of Bitcoin's loudest and most consistent champions, and he's quick to point out how far things have shifted politically. He notes that Trump, unlike previous leaders, seems to understand that Bitcoin and crypto are not fringe experiments. They're politically powerful, economically influential, and technically transformative. In Saylor's view, part of Trump's political success comes from leaning into that reality. Under his watch, the tone in Washington has moved from hesitation to outright enthusiasm. Instead of dragging its feet, the U.S. is now setting the pace globally with initiatives like stablecoins and even talk of a Bitcoin strategic reserve. By doing so, America is forcing other nations to play catch-up. Saylor also emphasizes Bitcoin's adaptability. It's not a one-size-fits-all solution but a versatile tool that meets different needs depending on the situation. In a collapsing economy, it's a way to preserve wealth when local currency fails. In authoritarian states, it offers an escape from capital controls and censorship. For companies, it provides a modern, borderless financial network to build on. A Nigerian trader, a German investor, and an Argentinian family will all experience Bitcoin differently, but the underlying promise stays consistent. It solves economic problems without requiring permission from banks or governments. That universality is what Saylor believes makes Bitcoin unstoppable. Whether it's embraced as national policy or adopted quietly by individuals under pressure, Bitcoin finds a way to prove its value across vastly different environments. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
I think that Trump realizes that Bitcoin and the crypto industry in general is incredibly powerful politically and economically and technically, and he attributes a fair degree of his political success to the support of the entire community. So they're very enthusiastic. Every cabinet member is enthusiastic. The Trump administration's enthusiastic. They're going to harness it technically and economically, and that will progress. And I think, the Genius Act, the launch of of stablecoins, the Bitcoin strategic reserve, all of those things are indicative. The U.S. went from grudging acceptance of Bitcoin, dragging their heels on everything else, and being fairly indifferent to the opportunity as of a year ago, to enthusiastic embrace of Bitcoin, enthusiastic embrace of all the digital assets industry, and they went to leading the industry, and now they're kind of in the driver's seat. They're probably the most progressive, and other countries are going to have to keep up. Well, there's a ton of corporations and actors that adopt Bitcoin that I didn't even know about, that did it for reasons I'm unaware of, and of course, the classic example are all the OGs that adopted Bitcoin because they came out of Argentina and they were victims of currency collapses, and I didn't live through their bank collapses, through their currency collapses. So I would say the beauty of Bitcoin is it is a solution to the economic problem faced by 8 billion people and 400 million companies and who knows how many entities, and all of their problems are different, all their circumstances are different, and it offers it's a different solution for someone living in a war zone than it is for someone living in Shanghai, than it is for someone living in North Korea, than it is for someone living in Germany, than it is for someone living in Nigeria, and even is different for you in Nigeria 5 years ago versus you in Nigeria 5 weeks ago. So dynamically, everybody's economic challenge is evolving, their circumstances are different, and it offers everybody this opportunity to solve their problem with technology. And the reason it's successful is because it's this massive parallel shared nothing network where you've got hundreds of millions of people thinking independently for themselves in their own local circumstances without asking for permission from anybody else to think. So for me to presume that I know why someone did it or I understood the problem, it's like no one person really understands the entirety of the human experience. It's just too multifaceted, too high bandwidth, and generally the best solutions. The reason Bitcoin works is because someone that you don't know with a problem you don't have in a place you've never been to settles upon Bitcoin as a solution, and then you're walking down the street in the random place, they're like, and they think, oh, we are comrades, right? It's like, I don't know you, but I had a different thing, but we solved it with a common network and a common asset and a common protocol. And you might not even have time to figure out what their problem is, but it doesn't matter. They're helping you. You're helping them, right? It's just one of the most magical examples of human cooperation to further the human condition and the civilization that I've seen.
Michael Saylor doesn't sugarcoat what caused the last crypto winter. It wasn't just bad timing, it was structural fragility. The system was overloaded with leverage and fake collateral. He points to Luna and Terra as the most obvious example. Luna's value was held up by Terra, which in turn was traded for Bitcoin. When Luna collapsed, Terra unraveled, and the Bitcoin tied to it was dumped on the open market. That sparked a brutal cascade. Suddenly firms like FTX, Celsius, BlockFi, and Genesis were hit with forced selling and redemptions. They'd been lending and borrowing against each other on leverage that sometimes reached 100 to 1, often backed by nothing of real value. Once one domino tipped, the chain collapsed, taking Bitcoin down more than 75%. Saylor says today's environment looks nothing like that. The reckless players are gone bankrupt, shut down, or facing criminal charges. Tokens like Luna and FTT no longer exist. The Wild West phase of crypto is effectively over. In their place is more stable, long-term capital. Tens of billions of real dollars are now flowing into Bitcoin, not to speculate on short-term pumps, but to hold as a strategic reserve. Institutions are leading this charge, and crucially, they're not levering up the way the old players did. Let's get back to the interview.
If you have that structure where you have, if I took a public company and I capitalized it on a security with 1% of the float outstanding, and then I took another public company and capitalized it on the second public company with 1% of that float. And if I took a third public company and capitalized it on the second, and I would have 1,000 to 1 or 10,000 to 1 lever, and there's $1 million backing $10 billion of market cap, then when I crush the one in the middle, everything collapses and you get your crypto winner. And that's what we got in 2023. You had massive structural leverage that was backed by air tokens from all of these crypto cowboy unregulated exchanges. They were making loans they never should have made, backed by collateral they never should have taken, right? And so you get a 75% drawdown. Well, what's the difference today? Well, first of all, they all got wiped out, right? All the companies went bankrupt. They're all in jail. There is no FTT token. There is no Terra Luna token, right? Anybody stupid enough to give you a $2 billion loan in return for $1.5 billion of yo-yo token, like, where are they, right? They're either in jail or they're bankrupt, or they've quietly withdrawn from the industry. So the industry grew up. It grew out of that crypto cowboy phase. The capital in the business today is much more permanent capital. Like, so we spend $40 billion plus buying Bitcoin, and our use case is to hold it forever. Okay, that's 40 billion of real capital. I don't think there was never 40 billion. I don't think anybody ever invested $1 billion in any other token in 10 years. So it's a different capital structure. You have institutional investors with permanent money. You can't lever up 20 to 1 and daisy chain 3 times. You've got a functioning options market, options on MSTR, options on IBIT. the options are damping the volatility. So if you're looking at the market today, the observation is there's more permanent capital, there's less leverage, it's not even possible to create that leverage. There's more derivatives, there's less volatility. There's a use case, long-term capital. And today there's 150 public companies that are all vying to use Bitcoin as long-term capital. And 4 years ago, there was one public company that was trying to figure out what are we going to do with Bitcoin. And so the market's changed, the structure's changed, the capital has changed, the leverage has changed, the volatility has changed. It's reasonable to expect drawdowns and run-ups, but not of the same nature that you saw when the industry was unregulated offshore. The real source of volatility is the cross-collateralization to yo-yo tokens, right?
Yeah.
And what's happening is, as there's less of that and there's more institutional buying and selling and trading, the volatility and the nature of it starts to drift more toward conventional equity assets, away from the crypto assets of 2017.
So in a very real sense, we are moving away from crypto, and now we are discovering what Bitcoin really is.
Well, I mean, Bitcoin is the one digital commodity, therefore it's the one institutional grade asset. And as it gets embraced as digital gold or digital capital, and as it gets cross-collateralized with the S&P or with sovereign debt, or with real estate or something like that, it'll start to drift toward their degrees of volatility.
That does make a lot of sense.
And stabilize.
What becomes clear is that Bitcoin's story has shifted from fragile experiments propped up by speculation to a sturdier phase defined by institutional adoption and geopolitical weight. The collapse of high-risk tokens and over-leveraged firms cleared the field, leaving behind a leaner landscape where capital is anchored in long-term conviction rather than hype. At the same time, its appeal has widened far beyond traders. Governments, corporations, and everyday users in unstable economies are all finding different reasons to turn to it. That blend of political recognition, global utility, and financial resilience suggests Bitcoin is no longer just surviving cycles but shaping the agenda. Could this transformation mark the point where Bitcoin moves from being a disruptive outsider to becoming a permanent pillar of the world's financial order? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.